All right, everybody. Chris Johnson here, Monument Traders Live. As you can see, I've got Jon Najarian. I had a big intro set up for him, but I mean, what other intro can you give a guy than just he's walking around the streets in Paris getting ready to go to dinner, right? I mean, come
Chris,
on, Jon. This is
uh,
big. You're big timing us.
I thought, if I'm going to be on a show as big as Chris's, folks, I had to be somewhere big as well. And so
Come on.
Paris is where it is. Thank you,
Yeah.
Chris, for having me.
No, oh, my pleasure, man. It has been, 15 years since you and I have sat next to each other at OIC educational meetings. For those of you that don't know Jon, he is truly one of those in the industry that has been here forever. He's part of the foundation, I'd say, of retail investor options trading. And that is after he was
Oh,
a professional trader. Now, stop it. Let me do it for a second here, Jon. I mean, you go from playing football with the Bears to the pits of the CBOE, and we're going to get into that in just a minute, though, and on to develop a couple of companies with one goal in mind, it seems, and that is to bring, if you will, the CBOE and options trading to people that are watching us today. And it started way back in the 80s. I mean, a lot of our people probably don't even know that options traded back then. So you are a wealth of knowledge. And I'm just, when I was asked if you could come on, I was like, oh my gosh, yes, let's do it. Um, by the way, last time we were in New York City for one of those OIC panels, I think you didn't go to dinner with Price Headley and I at the Palm, and Bruce Willis was sitting next to us. So that's the
yeah.
closest I can come to big time in you, man.
Well,
All right.
I saw Bruce once at in Atlantic City,
Yeah.
and hell of a nice guy. Obviously, we all sort of feel for him with the issues that he's dealing with now, but I'm still jealous that you guys were together in New York at the Palm.
It was a great night. It was a great night for sure. All right, let's jump into it. And I really
All
want to
right.
give people a feel for who Jon Najarian is with this. So, as I mentioned, and for people to imagine you going from, they have to stand next to you to see how big you are, but going from playing linebacker for the Bears, and I'm sorry for what a great game it was, but sorry for their loss to the
Oh,
Rams.
fantastic game again. I love that you are smart enough to remember how painful that is, Chris, when you see. But nonetheless, it was a great game, and they had a great season. So
Right.
I'm
So
I'm sad for them, but I'm happy that we finally have a good team again.
that's right. We'll see where the Steelers land in a couple of years here. But you go from the gridiron to the trading floor. What in the world caused that turn, that transformation? You don't see somebody make a jump like that. What was it that drew you to the CBOE at the time?
The adrenaline, Chris,
Oh,
the idea that it's low risk and high reward, quite frankly, because options can be a very low risk, and that's why Chris is so popular with all of you guys, folks, because you can take a lot less risk with options and get a tremendous reward. The question is whether or not you have the discipline to cut losses, and whether or not you're not going to be too greedy when you're taking profits. But other than that, yeah, Chris, that's what did it. I wanted to stay in Chicago. I loved the city, and the excitement of being around the trading floor was just it was pretty much addictive.
yeah, I could see how that. Now, people romanticize that whole idea of being in the pit or being on the floor. I was there a couple of times. Remember Jim Bittman, of course. Jim
Oh
would
yeah.
take us down every once in a while and tell us to put our hands in our pockets so we didn't accidentally buy something. But everybody thinks about that energy and what you just said. How
Yeah.
does that translate into what you're doing with investors today? How have you transformed that energy? Because it definitely is an energy.
Yeah. Well, for the better part of probably, gosh, 20 years, we were training our own traders to, since they were trading our money, Chris, my brother's money, my money. We were trying to train them as best we could so that they would understand the risks and maximize the reward. And I'm not saying we're the only ones, because obviously Chris has done the same thing, guys. But we really were very focused on educating our traders and then later on investors so that they could be in the same position we were. And it is not that tough. It is just a question of committing a little bit of time to it so that you can be a more efficient and better trader.
Right. That makes me, and I already mentioned Jim, who was also one of those people that just, was cut the path for everyone as
Yeah.
an educator, which you're a great educator, John.
Oh, thank you.
Jim used to
You as well.
start all of his presentations, whether it was a money show, OIC, whatever it was. He would say, he had a joke. He would say, "Hey, the best way to make $1 million, what is it?" And everybody would, and he would say, "Well, you start with 2 million in the options market." That's kind of one of those things. And you just mentioned risk and reward. And I think we've seen now historically, especially as options have become mainstream, it's not a situation where you start with two and get one. It's one where you start with two and you get four, or you get five or
Yep.
six. Is that because the options game has changed, or is it just the same? I mean, everybody thinks about market makers and bid ask spreads back in the day, and yeah, they were a problem. But now has playing field leveled out enough that it's made what Jim said a little less of a reality here?
Well, I think that the opportunity has never been better, Chris. And here's why, folks. It's not just Chris or John telling you that, oh, it's a great opportunity, spend some money and I'll show you how. It's a
Right.
question of um, the the people that are trading now are trading on markets that are so much tighter. I mean, it used to be, folks, the spreads were like this. Now the spreads are like that. Why is that? That's because it's electronic trading. It's Ken Griffith at Citadel. It's Vinny Viola at Virtu. It's the guys at Spike Trading or Don Wilson at DRW. It's all of these firms that are making markets for fractions of a second. But because they're trading in and out thousands of times per minute, folks, not per day, per minute, those folks are making really tight markets. And back in the old days, like for instance, here's I think one of the best ways to put it, Chris. When I started, we were trading 400,000 option contracts a day. That's between four exchanges. Now we trade 60 million per day. So if you guys do the basic math and divide 256 trading days by 60 million, we're doing as much trading in one day as we did in an entire year when I started back in 1981. So that's the opportunity now, is that those folks that were trading, if you want to consider it against the people that were trading on the other side of, they're trading for fractions of a second. Most of the rest of us, including Chris and John, are trading for hours, days, or weeks, not fractions of a second. That's our edge.
That's a great point. So it really is. It's more of an efficient market now,
Yes, sir.
and the tools that options investors have has just exploded. I mean, I, I I can remember when you had to place an options trade as a broker. I had to call our trade desk. They'd go to a market maker, get a price, call us back. We'd say yes or no. They'd go and
Yep.
buy it. We'd fill out a ticket, walk to the cashier. You know the whole thing. Walk to the desk, turn in our ticket, and you get back a fill at some point. Now it's a matter of seconds. So, actually, I'm going to ask one more question about the floor experience, because that's really what
Sure.
I think is special about, your experience there as being down there on the floor in the battles. But is there a war story you got? Is there some sort of funny war story that happened on the CBOE? Everybody's got a story. I've heard about fights. I've heard about, people being in people's spots. What's your just one quick war story?
Sure. Yeah, there were lots of things like that. And when I started, I mean, Chris and I are both, I think, physical guys.
Yeah.
But you get down there on the floor, and unless you're really, really cocky, you know that the guys you're trading against when you're first starting are better than you. They know the drill. They know the brokers. They know everything better than you do, even if you're really smart. So um, it's tough to work your way down next to the biggest brokers, but that's where all of the retail order flow is coming into the pit from the guy with Merrill Lynch, from Schwab, from TD Ameritrade, from whomever. And so you want to stand next to that broker, but it's a very desirable spot. the other guys will literally elbow you, shove you, or just make it really hard for you to stand in that spot. And as a new guy or gal on the floor, you've got to be, I think, aware of that and not fighting it as much as just earning your stripes. So yeah, there were situations where people would fight, and it's $5,000 a punch, folks. So luckily, I never got in a fight. My brother never got in a fight, but I definitely, had some shoving matches with some people who didn't want me in their spot, and they would like elbow you, and you'd be pushed over, and then you just have to push back. And it was, in the old days, it was a lot more physical than it became as time went on, especially as you became on a par with the people you're trading in the pit with. It became easier and easier. But at first, it's really tough to break in. And then imagine that you're down there on the floor, folks, and every trade you do, everybody on the floor sees it. Everybody in that pit sees it. So if you bought an option that is now not doing so well, you paid $4 and now it's $2.70 or whatever. They all know you've lost hundreds of thousands of dollars, and they're going to do everything they can to rub it in, to get you to leave that pit so you don't earn it back. But you got to, stick to your guns, stay in there. And that's the toughest thing when you're first starting out. After that, it's pretty much just like a regular job. You just put on your hard hat and your lunchbox and you go into the pit.
Yeah, yeah. So back then, when you're in the pit, when you're on the floor, you could sense what's going on, the ebb and flow of the market, and use that to your advantage. Is that something, let's call technology has allowed you to do from not being on the floor every day, Jon, where you can say, I'm getting a feeling for this. And then you're either, people have seen you on CNBC, they've seen you on Fox Business News, they may have seen you on Market Rebellion too. Do you get that feeling, that buzz of this is what's going on in the market and I need to get on it right now, and then relate it to people, tell people like our viewers here, this is what I see happening? How do you do that today from Paris while the market's trading today?
Well, we do it with algorithms, computers, and a bunch of really smart traders. Guys like Chris, if I could afford him, would be on our team down there, basically reading the order flow, if you will, reading what the algorithm says, folks. So I trade the same way Chris does, the same way all of you do, the exact same way. I don't have a special number I call and I get directly into a pit. There are no pits anymore, folks.
Yeah.
It's all a club, as they call it, a central limit order book. And it's in the data center of the NASDAQ, the New York Stock Exchange, the SIBO, all of these 16 different options exchanges. And what you're doing is you're shooting in an order and you're pointing and clicking. That's what we all do. And then you're getting a response back that you're filled, and it's almost instantaneous. If you're paying the offer or selling the bid, it's like that. It's almost instantaneous. And on the other hand, as we always told our traders, Chris, if you really need to buy something, you step up and you pay the offer. If you really need to sell something because you're losing money or whatever, you're taking a profit, you hit the bid. You don't sit there saying to me the next day, well, yeah, I bought this option at $1. It went to $2, but I couldn't get out. And I'd say, why? Did they shut the market down? And they'd say, no, but I was hanging out at $2.02, and it was trading two for like half an hour, $2, $2. And I never hit the bid. And I'd say, well, that's the problem. If you need to sell, you hit the bid. If you need to buy, you take the offer. You got to do one of those every time, because there is no spread anymore. It's really just bid and offer. And if you need them, you got to trade that way. Hit the bid, take the offer. That's the way it works.
I think everybody just learned something big, and that comes straight from you. A lot of options traders, including myself, every once in a while you get stuck on that. Well, let's look at what the mid is here, and I'm just going to squeeze in between the bid and the offer on this, and it almost turns into, it turns into a pride thing.
Penny.
Right. Yeah. It's pride though, which my
Yep.
father always told me, pride and anger, those are, you combine those two, and that's the best way to lose money. So what you're telling people is swallow your pride every once in a while and just hit it, get out.
Yep. I mean, I guarantee you, folks, when Warren Buffett gets into a trade, when Larry Fink gets into a trade, when Elon Musk gets into a trade, Michael Dell, any of these people, they all trade options, by the way, folks. Everybody I named trades options. And when they're getting into a trade, they don't care about, I mean, do they want to get the best price? Of course, we all do. Just like if I go to buy a car, I want to get the best price. But a car is going to be, what if there were 10 guys surrounding this car looking at it saying, I'd like to buy that thing. How much is this? How much is that? I mean, that's not the way it is with options. With options, with stocks, with futures, when they see it and they say, hey, this is the price, pay that price, get into it, and then hopefully sell it at a higher price. Or if you're selling it, sell it and buy it back at a lower price.
I love that. I love that insight. You just said something that I actually wrote on the desk. I always write notes on the desk with my my dry erase here. Everybody trades options. Elon Musk, Warren Buffett. I mean, the list is, Michael Dell, you, me.
Yep.
Tell me why. Why are they? I mean, I know why I trade options. Why is this now? Because options used to be one of those things that were so difficult and confusing, and we've seen volume just explode, not over the last 10 years, but the last 20. I can remember 1998, 1999, when we started
Yep.
to see, go, why? Why is everybody, if they're not trading, people in the chat aren't trading options, what are they missing? What's the reason that everybody trades options?
Number one, leverage.
Hmm.
Uh, for some of us, that's the number one reason. So if you're looking at for instance, a 100, 200, $300 stock, and we could all name them, whether it's Palantir, whether it's any of the big tech stocks that have just rocketed higher like Meta or Google, even after they've done stock splits, they're still very expensive. 1,000 shares of that, of a $200 stock, is $200,000.
Right.
So leverage, that's one reason, because I can put down a lot less money. Two, I define my risk on entry. I know exactly if I'm buying an option, which is what I do mainly, folks. When I buy an option, that's my whole risk. The entire risk I'm taking on is what I paid for the option. So, for instance, if I bought a $5,000 option to control Palantir or Dell or Meta or Google for a month, let's just say for 1 month, I've put that money down, 5,000 bucks. If I went to buy the stock, it would be hundreds of thousands of dollars to buy just 1,000 shares, which is 10 option contracts, because every option's for 100 shares. So if I'm doing something like that, I think the leverage is important to a lot of us, Chris.
Right.
And then the fact that I'm defining my risk, that $5,000 that I spent, that's all I could lose. If I buy Meta and it's trading $300 or $250, whatever, if I'm buying that, 1,000 shares of that, it could fall by 10% in a day. What's that? $25,000, $30,000. So, like I say, it's leverage, then it's defining your risk on entry, and what better way, if you think a market is either sideways or sort of slowly trending higher, what better way to make money than to sell an out of the money put option, for instance? I'm taking on the obligation to buy the stock if it drops. And if it doesn't drop, I keep the money. I keep the premium that I got for selling that option. I think an awful lot of us do it for those three reasons:
Yeah.
leverage, getting a defined risk on entry, and I can't get paid to be short the stock, really. I mean,
Right.
if I'm short the stock and it rockets to the upside, I lose money. But I could certainly sell some options and make money on that.
Yeah. I mean, and when you're selling in the you mentioned selling puts. I mean, you get the ability to name your price, not who is it? I
Yep.
forget who the insurance company is that uses that as their tagline, but you get to say, hey, if Procter and Gamble or Palantir. It doesn't matter the company. If it drops
Right.
to this, I'd like to buy 100 shares, and boom. If it doesn't, you get paid. So
Exactly. And I think that's a significant edge, Chris, that people that understand options tend to lean on that because they can actually make money from a sideways market. They can make money from a trending up market without, I mean, some of our biggest clients sell puts all the time. Now, that's not me. I don't like doing that because that's an open ended risk. I have to buy the stock if it falls, or at least I'm obligating myself to buy it if it falls. But if I looked at a chart and I said, you know what, I think there's a really strong support $10 under where this stock is. If I decided to sell the put at that strike price that coincided with a $10 drop in the stock, I can't do that with stocks, but I can do it with options. I could look at the chart, pick out a resistance or a support level, and then take advantage of it through options, which you can't do with stocks.
Right. You mentioned something there on technical analysis, and I know you're going to be with Nate Baer, I think, next week talking technicals.
Yep.
And I want to talk a little bit about something else that's part of your strategy, which is unusual options activity in just a minute. Before I do that, you've started more than one company. I mean, you've started a market making company. You've also been the brain behind Option Monster, you and Pete. Pete is his brother, who's just as equally. I mean, you guys are both cut from the same cloth. Speaking of that, tell them why you're Dr. J. Let's get.
All right.
I'm going to sidebar that for just a second. I know, but where'd Dr. J come from?
Sure. Well, as Chris knows, folks, my dad was a doctor, transplant surgeon. And so to honor my dad, I took the 3-letter acronym DRJ for Dr. J, because that was always my dad's nickname, because he's a doc. And super guy. He's not with us anymore. My mom and dad have both passed on, but boy, they instilled in us a lot of respect and a lot of love. And it's just my brother Pete is a great trader. He was a professional football player for 6 years. I was a professional football player for 4 games. So I just like to put it in perspective that he is the one with all that athletic prowess. I was just good enough to get on the field for the Bears for 4 games, and then I got cut. But Pete played for 6 years in the NFL, and he has a whole different level of athletic talent as well as being a really smart kid. So we're lucky to be in business together, 2 brothers that love trading.
Yeah, so the two of you started Options Monster, Trade Monster, went on to sell that. What were you trying to, what's the problem you were trying to solve there? What were you trying to do with those 2 businesses, those companies?
Sure. Well, Option Monster was an educational site, similar to what we do now with Market Rebellion.
Yep.
And Trade Monster was a trading platform which got bought by E-Trade. E-Trade has since been bought by Morgan Stanley.
Right.
So if any of you trade on either E-Trade or Morgan Stanley, you're probably trading on something we built. But we wanted to make a platform for trading that was simple, for anybody to use, could use it right out of the box, if you will. Just download it, and it was the first web browser-based trading platform. And for 4 years, we were #1 rated by Barron's for best for options traders. Now, there's been other great ones since then. And I'd like to say that our new version, Rebel Trade, is as good as Tasty or as good as Thinkorswim or any of those others. But yeah, that's why we did it, Chris. We wanted to make it easier for people to be able to trade just by, downloading or using it right on in a web-based browser.
Yeah. And do each one of the companies, each one of these businesses, have they always reflected Jon Najarian's, your philosophy? And if so, what is that philosophy? Tell the people what it is.
Discipline. Believe it or not, folks, it's all about it. And thank you for the question, Chris, because we do get asked it a fair amount. But yeah, what separates me from somebody who is not successful at trading. Is it brains? Probably not. Many of you are smarter than me. Many of you watching have probably picked out stocks that have moved dramatically higher or lower. And perhaps you've been lucky enough, smart enough to be on the right side of that trade. But did you have the discipline to cut the loss? Did you have the discipline to take the profits? Discipline is everything in this game. Larry Fink, again, Vinny Viola down at Virtu, none of these guys would be where they are if it weren't for discipline. And I like to say, and my brother Pete coined the phrase, discipline dictates action, DDA. And it just does, folks. Discipline of taking your profit, discipline of taking your loss is the difference that separates a winning trader over time from a trader that just, makes some money, and then boom, flash, they lose it all. Well, they didn't have discipline. If they would have had discipline, they would have kept making money. And again, pigs get fat, hogs get slaughtered. You got to be willing to take small gains, and every once in a while it's a big gain, but you never want a big loss. Cut those losses, keep them small. Like I say, you can define your risk with options.
Yeah, Brian and Karim pointed that out last week. We were talking about silver, and Karim was saying, hey, silver feels great if you're long it right now, but he brought up the hogs get slaughtered. I mean, it is true, and that my next question was going to be, what's your one John rule, that's kept you successful or kept you out of trouble? And you already answered it for me. I mean, it truly is discipline.
It is. That's it.
Going back to real quickly, one of the things you said in terms of options, the advantages, is you can limit your risk. What you put on the table when you buy that, when you hit that buy to open, whatever that premium you're paying at that time, that's your risk. But when you go into an options trade, is that entire amount your risk? Or because a lot of people, you and I've seen them, they'll go in and they'll buy an option for, let's say, $1.20, and they think it's cheap, $120 a contract, right? And they say,
right.
This, and there's that feeling, that false sense of security that it's only this amount, or they look at the upside. That buy the open, that ask that you're paying, that offer that you're paying is not what you consider the risk, right?
Well, I do consider that the risk, but my credo or my discipline is going to be that if I lose 50% of that, Chris, I'm going to cut the loss at 50%. So, Chris's example, I pay $1.20 for an option, and I buy 10 of them. That's $120 each option. 10 of them would be $1,200. If that option falls to 60 cents, I'm out. So what did I lose on that trade? $600. A lot better than 1,200, obviously.
Bingo.
On the other hand, where do I take profits? Because that's just as important as cutting my losses. Where do I take profits? Well, I take them at a double. That's me. Now, for some of you, maybe you're going to say, you know what, John, if I make 50% in a week, I'm going to take it. I'm not saying you're wrong. There's nothing wrong with that.
Right.
As long as you have levels at which you'll take profits and levels at which you'll cut and take a loss. You just don't want the losses to be bigger than the gains, folks.
Yeah.
So my discipline is that on that same 10 lot that I bought for $1,200, if it goes to $2,400, I'm taking half, 5 contracts. I take half of them off, leave the rest, let it try to run. And if it does, great. Hopefully I sell the rest at $3,000 or $4,000. And if it doesn't, I cut it off. And that way I put money in my pocket on every trade. And like I say, I don't make money on absolutely every trade, but my discipline is I'm going to cut the loss at half. So if you're doing that, you're never going to eat like a bird and crap like an elephant, which is something that, Chris and I laughed about years ago, folks, when we talk about it, whether it was with Jim Bittman or anybody else. You can't eat like a bird. In other words, take little tiny nibbles and then lose big. You just got to do the opposite. Little tiny losses, win big.
That's right. That's right. I learned something way back when we were doing those panels and such, and that is that any trader can get lucky, and you really
Yep.
can. But the successful ones make their own luck first of all, and they watch that risk. I mean, you luck prefers a prepared trader. That's what it comes down
Now,
to. And
now you gave me one, Chris, that I'm going to write down.
I
Luck
that
prefers a prepared trader.
yep.
I love that.
And that goes to exactly what you just said. Not only thinking about the risk that you're putting on the table, where you're going to close that trade out, but where is this thing going to go to the upside? That's being prepared, knowing both of those outcomes and how you're going to trade it. So luck always
Yep.
prefers a prepared trader. There you go. I'm glad man. All right. I'm
I
feeling
love
good,
that.
John.
That's a great one, my man.
All right.
So I will be using that, but I'll give you credit. I'll give you credit for
I
it.
I appreciate that. So if people haven't seen you on CNBC, they need to, CNBC and Fox Business News. I mean, you and Pete have been everywhere. And I used to love it when you both be up on they do the 8 panel or the 6 panel or the 4 panel. And I got some great stories about Joe Kernan, who's from Cincinnati as well. But
Oh,
we can share
great
those.
guy. Great
Yeah,
guy.
we can share those another day. I've got his high school senior picture that I'm waiting to drop on the producer there when he decides to retire. And it's funny, big lapels and everything. But how did that come to be? How did you start making those appearances and delivering your messages through that media?
Way back when, Chris, the folks would they were always looking for somebody to talk about it on TV,
Yep.
talk about the markets, not necessarily options. That took us a long time to get them to let us talk about options, but they wanted people to talk about stocks. So a big day would happen in the market. They'd come down to the floor, they being Fox or CNBC or CBS or NBC, whatever, and they'd want to speak to somebody. But all the big firms wouldn't let their traders speak. So if you went to Goldman Sachs, Goldman had like 2 or 3 people that they would let speak: the CEO, maybe the president of the company, and maybe their head analyst,
Mhm.
which was Abby Joseph Cohen for a long time, if you guys remember that name.
Oh man.
But they would not let a regular floor trader or a trader on the desk speak, because what if they say something wrong? They would worry that maybe we're going to get sued or whatever. So when they came down, Chris, my brother Pete and I were one of the few independent firms on the floor. So nobody was going to tell us we couldn't talk. They'd say, well, maybe you can go over there and talk to Pete and John, because everybody else works for Bear Stearns, for EDF Man, for Goldman Sachs, for Lehman Brothers, for JP Morgan. So those guys could not speak to the media, but we could.
Yeah. Yeah. That tells you it kind of opened up the options market, obviously, too, as well. I mean, now you've got, my gosh, almost on a daily basis, people talking about options on CNBC, whether it's Fast Money. You've got a couple different, that are making the regular rounds. What, and we could go into the book, and you guys have done so much in the industry. And if people don't know it, name of the book is It's Not an Option. That's one of the books. I mean, you guys have been busy, and it's a must read. But
Thank you.
yeah, let's go into the unusual option activity, because I think that is probably what you are best known for in terms of your approach, in terms of unwinding the opportunities, seeing ones and zeros up on the screen. And every once in a while, you mentioned algorithms. That helps out quite a bit. And I'm sure back in the day, just being on the floor, you could see big order flow coming through and kind of go, ooh, what's up? My spidey sense is tingling. Explain unusual option activity and that data that goes into it real quickly.
Sure. Well, so options used to only trade on an individual exchange, folks. For instance, Dell options only traded on I believe, the PhilX exchange. IBM traded on Chicago exchange. Microsoft only traded in San Francisco. American Airlines only traded on the New York or Amex exchange. So each exchange had its own franchise, if you will.
Mm-hmm.
What happened then was the SEC said, you know what? It seems to us that this is anti-competitive. They should trade everywhere. And if they don't, we're going to basically charge you guys with colluding to keep the markets as wide as possible. Well, nobody wanted to hear that the government was coming after them. So the exchanges, in one fell swoop, decided everything can trade everywhere. That way, if somebody elected not to trade it somewhere, that was their own decision, but it was available for trading. And thus, the options franchises were worth a lot less. So IBM, once it could trade in Chicago, in Philadelphia, on the Amex, and on the Pacific, all at the same time, our seats fell in value. They were cut in half, literally in weeks and months, because we didn't have an exclusive anymore.
Right.
So Pete and I went and we created an algorithm that would basically amalgamate or total sum all of the trades that were happening on all of the exchanges second by second down in the data centers. And once we did that, we had something that could read then back like it was in the day, what was the total traded of that particular option class? And were they buying or were they selling? And that made a huge difference. So that unusual option activity is what we get when we see the big buying of calls, which is bullish, or puts, which is bearish. And then we just run in the same direction, Chris, as you know, that the smart money is going in, up or down.
Is there and as we've seen that option volume explode, I mean, it's been parabolic. Has the option market gotten more noisy, and do you have to filter those out, or I mean, it really has become a larger pool. You're no longer, let's say, a pond. You're swimming in the ocean, but you guys have figured
Right.
out how to navigate, all the tides and everything, right?
Right. Just like we said earlier on the call about the volumes of trade. Now it's 60 million
Yep.
option contracts a day. That's great for liquidity for both of us, folks, for you as well as for me and Chris. It's wonderful to have that kind of volume. And I think it's also a situation where we trade more volumes in options that control stocks than the stocks themselves. So if you hear that 1 billion shares changed hands on the New York Stock Exchange on a given day or the NASDAQ, and then you say, well, what's 60 million options? What's 60 million with two more zeros behind it, folks? It's not 600 million, it's 6 billion shares. In other words, 6 times the amount
Yep.
that trades on the New York. But you've got New York, you've got NASDAQ, and if you added them all up, options trade more, control more stocks than those exchanges do.
Yep.
So that's one of the edges that you get if you're trading options.
You just made me remember, I think about a month ago, I still pull down all the options data every day, comes into my server here, drops into my database, and I'm not combing through it the way you are, not even close to it anymore. But when I pulled up my aggregate reports on open interest, I noticed that NVIDIA popped up above the S&P 500, the spiders, in open interest.
Imagine that.
Yeah. And, the spider has always been the king because it's the S&P
Yep.
500. Explain to people real quickly, because that, I think, underscores why it is so important to understand even the basics about options. What does that mean when you have now, I don't know what the notional value is on those contracts, but it is absolutely huge. So how much does that define what happens with NVIDIA?
Right. Well, NVIDIA is a 4.4, this is as of last night, I think, folks, $4.4 trillion monster. 4.4 trillion. And I remember when Apple was getting close to 1 trillion, and people used to say, oh, what about the law of large numbers, John? Nobody can trade $1 trillion. And it's like, yeah, they can. It shows you that and that's one of the reasons I think Chris, why I don't trade very many indices. I pay attention to them, of course.
Hmm.
If the S&P is up or down 1.5, 2% on any given day, I'm paying attention to it.
Right.
But the S&P only moves like I just said, I guess 1.5, 2% on a big day. It moves that much. Whereas Nvidia might work somewhere in the 1 to 5% every single day. And then you look at stuff like, when Oracle last year in August, 2025 folks pull up the Oracle earnings, which were in August last year,
Yep.
and it moved 35%. Well, I guarantee it probably traded 6 to 10 times the volume of the S&P 500 that day.
Yep.
So yeah, those when those big moves happen, that's exciting, and it's something that we're there for. We want to be out there taking advantage of that.
Yeah, absolutely. Again, it just blows my mind, and I hope everybody in the chat's getting the right idea here. This is why you need to be looking at the options market and learning about it and getting tools, like John, not to no shameless plug here. I mean, it's true. You need as many tools as you can to level that playing field. All right.
Yep.
I know you got to get to dinner and you're hungry. First of all, real quickly, just give me a spin around. Everybody's asking, where is John? Let's show him where you are real quickly.
Sure. Well, I'll take a look down the street here, folks.
Oh,
So I'm here in Paris. That's that's one of the many beautiful streets.
come on.
We're just outside Saint-Germain-des-Prés. So we were in the 8th arrondissement. We're going to be having some dinner right over here at a place with the same name as my wife, Brigitte.
Look at
And
that.
then let's see, Saturday we're going to be heading, Chris, over to Austria for a couple meetings and a lot of skiing and probably a little bit of drinking too.
You got to stay warm. You got to stay
You
warm.
got to stay warm. Yeah, I agree.
Let me ask just a couple more here and give me quick ones here. 3 trends you're watching. When we look at the market right now, I already mentioned silver and this rip, and everybody's looking at silver and gold. What are the 3 things that you're watching that are big trends in the market? And you'll have time to talk about this with Nate next week.
All right.
But
I'll say number one, defense, because obviously Venezuela put it at the top of everybody's list. Greenland also. I don't think we're going to invade Greenland, folks, but I'm just saying we're looking at RCAT, which is RCAT, VAV, which is AeroVironment, big drone maker. Let's see, V-Wave, Vision Wave, VWAV. Most of these folks are autonomous or something that takes the soldiers out of harm's way as
Yep.
much as possible. So I think those are going to be extremely popular. Still, data centers, whether it's VST or any of the data center plays, and power for the data centers, which I think are SMRs, small modular reactors like
Yep.
Oklo. See, I see Chris raising his arm
Oh, yeah.
because that's where it's at, Chris.
Absolutely.
Oklo, any of the places where you can get power somewhere to basically provide what the data centers are sucking down in really big gulps.
Yeah. I mean, it is truly about powering what we're going to be using. Maybe we're taking a little break right now, at least on that trade, but it is about powering what is going to be powered in 2 or 3 years. And when you think about it, we're getting ready for a huge storm here in Ohio, all the way down to Texas. And I look at natural gas prices and all of that. Man, our grid in period needs help beyond the data centers. So I love the look at those SMRs, Oklo, GEV, Rolls Royce, which Karim was all over last year. So
Yep.
it is truly a hot area. And of course, you'd tell everybody out there that's a smart investor to pay attention to what's going on, the options on all those trends, I'm sure, right?
Absolutely. And you're seeing massive amounts of upside bets out there 2 to 4 months into the future, and in some cases into the leaps right now as well.
That's where you want to look. And I love the leaps. I'm glad you mentioned that. What a great way to leverage these big long-term moves. But I don't want to get into things that you can talk about next week. You're going to be with Nate Bear. I think it's next Thursday, same time, same place.
Yep,
If not,
looking forward
everybody's
to
going to
it.
get the notifications. You'll talk a lot of technicals. I wish I could do that with you as well today, but he'll talk a lot about that with Nate. I want to make sure everybody gets that. John, I'm going to let you go. You've been patient with my time and your time. I'm going to let you go and have that dinner. Enjoy it. Enjoy your skiing and make sure you stay warm, if you know what I mean. Yeah.
I will. I'll
Yeah,
make sure. Chris, it's
exactly.
great to see you again, my friend.
It's good to see
Folks,
you.
you're lucky to be listening to Chris tonight and every night. Thank you, Chris.
Yep. Have a great trip, John. Safe travels.
Appreciate that, sir. Thank you.
Bye-bye.